I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is Friday the 14th. For the weekly wrap-up, let's turn over to the trading platform and see where we closed off the week. Corn for May delivery trading at $4.84 3/4, down 1/4 cent. Soybeans at $13.90, down 6 1/4. Wheat in Chicago up 12 3/4 at $6.86 1/2. In Kansas City, wheat trading up 14 1/2 cents at $7.51 1/4. Logan, one of the things that we were looking at today was that new crop soybean contract. All eyes will be on the planting intentions report. Where do you see this technically right now after this rally in the last few months?
Yeah, well, we've been talking about it quite a bit here on GrainTV this week. You know, as we said, really since the middle of the first week of March, we've seen this market make lower highs here as we move forward through time. So a lot of technical traders obviously look at that as an indication that a run has come to an end. I think, though, today we had some important price action to take note of. Take a look here at this hourly chart of that November 14th soybean contract. You can see here the dotted line is really the trend line that this market has rode higher for much of the last 2 months. And you can see with today's close, we've now closed below it. So I guess that's just one more chink in the armor here as technical traders are looking at this market.
So it is interesting. We have broken the 200-day moving average. We've also broken that trend line. Yep. But the question is, will you reserve that bearish opinion, that full-on bearish opinion, for when we break that 1168 level? It's an area that we tested on the 12th. We tested it on the 10th. It's obviously an important battleground. If we go below that, is that when you get bearish, or would you say you're a bit bearish right now?
I think I'm a bit bearish right now, but I guess that would be confirmation here on the move. I think right now, looking at the bean market with how tight old crop stocks are, it's hard to be overly bearish this market. Additionally, as you said, we got the planting intentions report up here on March 31st, so there's some unknowns surrounding that report. Obviously, that's going to support prices a little bit, but generally the trade consensus coming into that report is that we're going to see a very large soybean number, so fundamentally that could weigh on things. But I guess to answer your question, I'd reserve a very bearish approach until we saw a strong close below 1168 and had a little bit more idea of what we may be seeing from the USDA there on the 31st.
And you know, it seems as though on Monday we're going to have an important report out. It's the NOPA crush numbers. Yep. That may be enough to help us break that 1168 price level. What are the expectations here?
Yeah, take a look here at this slide. This is what the trade is looking for out of those February crush numbers, and really the trade's looking for a pretty sizable decline in crush. February compared to January, off about 10%. So as you can see, expectations are for 140.9 million bushels crushed during February. We are going to see a lighter crush. That's pretty well accepted, but now the degree of the downgrade, I guess, is what traders are going to be looking at. We did see the USDA take 10 million bushels off expected crush here for the current marketing year in Monday's report. So I guess, like I said, in general, a lighter number is to be expected. Now we're going to have to ultimately see what NOPA reports there. That will be coming out at 11 o'clock Central Time on Monday. And as you said, Cody, that's going to be kind of the big fundamental driver for old crop in particular. So we'll help keep you posted on that report as it comes out. On Twitter, you can follow us over there. At GrainTV is where to find us.
Thanks a lot. And Logan, let's take a look here at the cash market. You know, on the Friday reports, we do kind of a wrap-up of what the cash markets have been doing. And one of the things we looked at today was basis calculated off of the July contract. And we looked at how basis moves throughout the year. You can see here, you have 2010, 11, 12, 13, and this year. You'll notice that this year for corn and for soybeans, and even more so in soybeans, you'll notice that the last couple months we've actually seen basis start coming off, and that's pretty atypical for this time of the year. This has a lot to do with the futures rally that we've seen. It's really opened up the bins for these farmers, and they've been taking advantage of the pricing here. It doesn't seem that these grain merchandisers really have to boost that basis here to draw draw that grain out of the bins. Now let's take a look at this week's changes. You'll notice that for corn, we are down on average 2 cents across the nation. An area to keep in mind here is the river market. That was up 2 cents, which is very atypical for everything else. Every other sector really seemed to be moving lower here, except for corn basis along the river. Now, when you take a look at soybeans, you'll notice that on average, soybean complex basis was down a penny and a half across the U.S. And along the river here, you'll notice we are down 5.5 cents. That's pretty significant. And one of the major contributors here, when you look at the total barge movements, you'll notice that soybeans were really tapering off here in terms of overall movements of barges for soybeans down the river. Right. Corn, we're actually picking up pace. We're staying firm. I think that's one of the reasons why basis along the river for corn has been able to hang in there while everything else continues to march lower.
Absolutely. If you guys have any questions about kind of the cash market breakdown that Cody just gave, feel free to give a call to the office. Our number is 877-472-4607. Over here at Grain Hedge, we have some great cash market intelligence tools for both grain producers and grain merchandisers. So give us a call if you want access to basically the data that we use to build the analysis that you saw here today on GrainTV. In general, that's what we saw here for the week in the grain market. As we said, coming down the pipe next week, we're going to have notebook crush numbers out on Monday. As always, ethanol numbers on Wednesday and export sales on Thursday. Then more long-term for the grain market, March 31st is the big day on everybody's calendar. That will be the planning intentions report. Right now at Grain Hedge, we have a promotion going where you get 5 free trades if you open a trading account with us prior to then. So give our office a call if you have questions about that. 877-472-4607. Thanks a lot for joining us here on a Friday. We'll see you on Monday for the Notebook Crush Report.